What's going on, guys? It's JD, the mobile trader, coming to you on Thursday, March 26, 2020. It's 1:37 a.m. Central Time. Okay, guys, it's a little late. The futures are down. Dow futures are down by about 130 handles right now. But we're going to talk about the regional banks. I'm not obsessed with this thesis, but I'm really focused on this thesis with the regional banks and their exposure to the energy sector, overweight. Primarily oil, and the regional banks focus on certain areas of the country. And right now, with the oil prices, just the issues that have gone that with Saudi Arabia and Russia kind of going at it, killing the oil prices, is going to negatively affect Zion's Bank, uh, Comerica, and we have what is this? BOK Financial as well. But let's focus on Zion's. They were the weakest to me out of the group so far. But we're looking at this trend. This is a daily chart. Uh, each one of these candles represents a day. But okay, of course, this was the Corona. This is the Corona right here. That's the Corona waterfall, I guess. Let's put the 50-day on here real quick. I'm going to put the 50-period moving average. I had it on there. The screen refreshed and blah blah blah. Anyway, it's overnight, guys. And this is a bearish swing trade in options, guys. I'm looking for that entry. I'm not hoping for a negative outcome, but I'll break it down to you as I go. So let's go a little bit further in here. I like to make it orange, and I want to make this thick so we can see the 50. Okay, big time sell-off broke through, gap down. What day? 21st of January, day after my birthday, 2020. All right, boom. That's the 30. These are actually my intradays right here, but this is a 30 exponential, and that's a 10. So 30-day, 10-day, falling below that. Found support 25.70. But all the other banks, I'm going to show you another bank in the same sector. I think PNC found better support. Everybody found a little bit of support. What a key. Found a little support. Everybody bounced up above previous levels. Even these guys did. But then, see USB. Trying to get a little support, but Zion's didn't really find any support. They bought a little buying pressure anyway. It's doji on the day, trading range. I'm looking for a little bit of a sell-off in 25.70. If it falls below that, I mean, this would be a long-term, not a long-term, but this would be a legit swing trade for me to where I would hold it for a little bit longer than a few days just to, if the thesis plays out and I see a price level. But let's take a look at what's going on. Energy lending hurt bank stocks amid plunging oil prices. So this was March 25th, and it's talking about since the breakout of the novel coronavirus in China, oil prices have been sliding. Okay, the deal between Russia and Saudi Arabia, so we have an oversupply. Prices into the 20s. It's going to hurt the banks that send loans to the different your different oil companies down, and whether it's in Texas, Arizona, Wyoming, things like that. So loans made to energy companies will deteriorate. This is, everything's not a guarantee, but it's setting up like that. So it's going to force everyone to raise their provisions, and basically you're going to have more collateral. You're going to have to. It's a domino effect. So Fed cutting interest rates almost to zero, and it's going to hurt the bank. It says likely, but top line growth, that, of course it is. Everything's going to slow down. The economic downturn is going to affect it's going to be trickle down. And these are smaller banks right here. This isn't like Bank of America and JP Morgan, Wells Fargo, the larger banks. We're dealing with the regional banks, smaller size, mid-sized banks like Zions, BOK Financial Regions, etc. It's gonna affect them. The charts are already showing it. Um, let's see, oil prices plunged, but let's go right here. I want to go back to a 2015 article. That's 2020. Energy lending, okay, we had the same thing. 2015, oil fears overblown in banks. Okay, we're going to see, you know, I'm not subscribing to it, but can I just get a look at it? Thank you. Raymond James analyst David Long and team continue to believe that concerns about oil loans made to oil companies by banks like Legacy Texas Financial Group, Texas, and Zions are overblown. They explain why. Let's see if LTXB is still in existence. They're still out there. They actually we had a merger. Okay. It's 2019. Legacy Texas Group now under PB. Prosperity Bank shares completes merger with Legacy Texas. Holdings shares closed Tuesday. Okay, what we have back here? They're going to buy Legacy Texas. What's the issue to be bought? Okay. Investigates proposed sell Legacy Texas. Anyway, I didn't think they were still Legacy Texas was still around. During times like this, somebody folds. Somebody folds, man. We continue to view the risk of material credit losses as unlikely given to conservative underwriting process. Okay, this is a different. There wasn't a big contagion happening right now, right at this point in time, but oil prices were the only catalyst during this period. Even after stress tests, portfolios, and recently published. Okay, Legacy Texas Group has fallen 1.6%, while Texas Bank shares have dropped. Zions Bank has dipped. Okay. All right, we'll go right here. Now, we're looking at the Form 10K. This is a warrant. Zions Bank released warrants that is this 2018, I believe, or it expires in 2018. If you look down a little bit further when they had the warrant, this is a warrant. Basically, it's like a stock option that gives you the company issues the right to purchase shares of the stock at a set price. But what we're looking at right now, they have to outline their risk factors to all investors. And the key thing that they have, the credit risk, I mean, everybody has risks, but they identify that their key risk is Zions Bank's credit exposure in oil and gas could be adversely impacted. So given the current volatility in oil prices, this is back years ago when they released this. So in oil prices, there wasn't a continuous, they're getting hit on all fronts. Oil prices, the defaults because of the coronavirus, and it's going to be a confluence of events. Does that fit? But anyway, it says we have concentrations of risk in our loan portfolio, including loans secured by real estate and oil and gas related lending. Okay, that's their key. That is their bread and butter, oil and gas, and it's getting hit. Coronavirus is killing all the other. They're not going to be able to make the loan payments. The stimulus package is going to help, for certain things, but this is going to be, they're on thin ice. Let's see what else I had. One more thing. Highly correlated to local economic conditions. Now, 77 to like 82% of their key revenue or income is geared in like the Texas, Utah, California area. In Texas, a lot of those oil barons are getting hit, man. There's going to be a lot of basically bankruptcies or companies going under. Um, Utah, Texas, California, commercial lending. We have, we have been and could continue to be negatively affected by adverse economic conditions. There's a history behind this, and if you continue now, if they take the loans or whatever, they can't do share buybacks. The dividend income is cut, but I think the key thing is the big banks, the collateralized banks, the heavily collateralized banks will have a little bit more cushion, more buffer to deal with this. Um, this is not a good thing. And I think I'm tracking Zion's right now. And for the fact of, for a trade, normally, I mean, think about it, the options were not heavily priced. They weren't overpriced. Um, they look, that it's not populating like it was earlier, but the 70 delta spread is wide, but we can bid that down. A $29 strike price for this May 15th expiration day. That's 50 days, and we're already in the money. The implied volatility is only 51. Everything else has been like 175 or whatever. Let's see, 300 open interest, 300 volume, 70 delta. This, and the spread is not crazy like these other ones right now. I know this is after hours, but I was just looking. I saw a few. I also saw on the April 17th, I think there was some arbitrage from the standpoint of like how the deltas were populating the other day, 40, 45, 56. Like that was the one right here. It was a weird delta, like it's supposed to increase as I go down. So 40, 45, 51, 77, 73, 84. So that's like the sore thumb right there. It's sticking out. This is a weird little situation. I don't know what's going on with the price action with Zions, but spreads are wide. Liquidity's, it's not big time liquidity right in there. I mean, that's the one with the most open interest right there with the contracts. But I'm just looking at Zion. I'm going to pay attention to this sector, guys. Here, let me show you. Go back to this. These are all the banks over here. You have BOK Financial, CFG, Fifth Third. Fifth Third found some support, bounced a little doji. I think it might stay up support, but you can monitor it with KRE. That is that's the ETF of the entire sector. So if this rolls, that somebody in this little sector rolls, and I believe Ozark has been just as weak as Zion in a way, but a lot of buying pressure came in at this level right here with some volume, but it hadn't matched that selling pressure. So I'm still kind of constructing this thesis, but it's something here. It's definitely something here. So let's, guys, pay attention to that. Let's go ahead and go to real quick to the overall markets. And that's the futures, Dow futures right now. We're down. It's 163 right now. Just kind of in the trading, kind of weird trading range, right? In there, kind of a little back and forth, and then when news hits, something's gonna break. See what Bitcoin is doing before I go. Put it on the 4-hour gig. Oh, bitty Bitcoin. All right, guys. I think that's it. It should be it. Let's see what Coop looks like. Double bottom might turn into head and shoulders. But anyway, that found a little pop. Nice little. Are we going up with resistance right there? Well, guys, that's gonna be it tonight. I just had my a little tangent. I was looking at Zion's. I just think that's the one that's gonna be hit kind of hard. And I think Ozark is also there, but Zion's really has that exposure to the oil and gas sector. All right, we'll talk to you later.